There we go. All right. Welcome, everybody. Thank you so much for joining today. My name is Kyle White. I'll be leading our webinar today. I'm the Director of Education here at Cooperatives First. And in that work, I oversee our work with emerging cooperatives and manage our online learning programs. This session is being recorded. Everyone who signed up will receive a copy. And please feel free. Share that with your teams. Do with it as you wish. We make our resources as freely available as possible. Because there are a handful of us on here today, please do just ensure your microphone is muted. If it is on, we might mute you. No offense meant. Just we don't want to eavesdrop on your phone calls if you need to take one. Um, we will have some time later on for Q&A. Feel free to unmute, of course, anytime during that. And if you have questions beforehand, you can also use the chat function. Um, if folks are familiar with it, the chat is kind of like in the lower middle part of your screen. If everyone could maybe just take a moment and introduce themselves in that chat, let us know your name, where you're joining from, and what organization you're involved with. Because I know most folks on here are coming from co-ops or credit unions. So let us know where you're joining us from. And I'd like to start our session today in a good way with a land acknowledgement. Um, I'm joining you from, or I'd like to acknowledge that Cooperatives First, and where I'm joining you from is in Saskatoon, Saskatchewan, which is located in Treaty 6 territory, home of the Cree, Saulteaux, the Dene, the Dakota, Nakota, Lakota, and Métis nations. And we acknowledge that this land was not ceded, but that the purpose of the treaties was to ensure the land would be shared. Indigenous people have been cooperating in these territories for thousands of years, and it is through cooperation that all our communities will continue to thrive. Because we're joined by folks from all over Turtle Island, I invite you to take a moment and consider the people and the ancestors of the place that you call home. Okay, seeing lots of stuff come through the chat. Looks like we've got pretty good geographic representation today. A good number of folks from Alberta. That's always good too. And a couple of familiar faces. It's good to see you, Dan and Carol. Okay, let's go ahead and get into it. I've got a PowerPoint slide deck prepared. So let me just pull that up. Actually, hang on now. Let me share my screen first, then pull up the PowerPoint. That's the move, I think. Share PowerPoint. Slide deck. Okay, can everybody see that okay? Okay, no one's saying anything. Okay, that's fine. I'll assume you can see it as intended. All right, so yeah, we're talking about our financial year end. Most of us are coming from organizations. That means you may have just had your financial year end on December 31st. Or for other organizations, it might be coming up on March 31st, or it might be coming down the way in the summer. We'll get into that in a little bit. In this session today, we'll talk about what the financial year end is, mostly because it is kind of like an abstract concept. So I just want to get us all to be on the same page, have a shared understanding of what your financial year end means and what implications come with it. That kind of now what question. We'll talk about maybe two of the big things that are immediately impacted by your financial year, and that is whether or not you need to undergo an audit of your financial compilation the board of directors is responsible for. We'll then talk about creating your annual report. An annual report is used to present to members and sometimes to funders or lenders, sometimes to government, to provide an overview of the cooperative's activity in the given year. And then we'll talk about next steps. And the next steps, of course, will take us up to the annual general meeting. And as you may have just seen on my screen, then we have another webinar coming up towards the end of February that's going to be focused on planning and preparing for your annual general meeting. I'll share a link to that later on. And then we'll have Q&A. Okay, so your financial year, what is it? A financial year, sometimes called fiscal year, is a 12-month period. When your cooperative incorporates, it'll set out the financial year in either the articles or the bylaws of the cooperative. This varies a little bit depending on your province of operation. That is, however, open to change. A bylaw amendment is usually required to change the financial year of a cooperative, and we've had a number of our clients do that. It's a fairly routine process. They may do it because it better aligns with operational realities, with grant funding, any number of things can influence when you pick your financial year. The three most common that we've encountered are the three I've listed here. There's the calendar year, which of course is what most calendars follow. January 1st to December 31st is your fiscal year. The government year, which picks up April 1st to March 31st. We'll usually see governments introduce budgets and do throne speeches following that government year. If you rely on especially federal government grants, they're usually going to use the April to March window for when they release funding, and their reporting will reflect that. So that's why a lot of organizations will align themselves with the government year if you receive federal monies. And then there's the school year, which is usually September 1st to August 31st, right? There's 31 days in August. Anyway. um, and that's quite common for cooperatives that are aligned with schools, so childcare centers in particular. They may align their fiscal year with the realities of when they're doing stuff as a co-op. So why do we have this? Why do we use a fiscal year? Why not just keep it a little loosey-goosey? Well, there's really important implications for your financial year. Um, Having that 12-month window gives you a manageable chunk of time to assess the operations of your cooperative. In particular, for the purposes of your annual report, it's your fiscal year, your financial year that is used to calculate your financial statements. So you'll take a look at the assets, the liabilities, the operations, the cash flow for that financial year as a way of assessing the cooperative's financial performance. Importantly to that, again, your balance sheet, your assets, your liabilities, those things accrue over time. But your operating statement, which is usually used to take a look at the profit and loss of the cooperative, its performance in a given year, that's quite important to have for a financial year. So your operating statement or your profit and loss statement or your statement of profit and loss, it's called a few different things. That one's quite important for your financial year. And it's what's usually used then to determine the profitability of a cooperative. So if you're profitable within your financial year, within that 12-month window, that's used for a whole host of different things, including the taxes that a cooperative will pay will be determined by the net income generated by the co-op in a 12-month period in your financial year. It'll also determine the patronage payments that are allocated to members. The board of directors usually with management will make a call on how much they're going to allocate to the membership based on the performance of the cooperative during their financial year. And there can be a whole host of other things that you measure. Lots of organizations will set performance metrics, usually as part of their strategic plan, and they'll attach that to their financial year. Tying those things together allows you to get a whole assessment and an evaluation of the organization as a whole. And so if your financial year has just ended, it was December 31st, now what? Now you've got a bit of a checklist. Okay. Now it's then incumbent upon the board of directors to prepare an annual report, to call an annual meeting, to file an annual return, and to file a tax return with CRA. And when your financial year is, so again, if it's December 31st, there will then be timeframes attached to each of these. In Saskatchewan, for example, your board has 6 months from your financial year end to call the annual general meeting and file the annual return. Organizations that are outside of that window and they don't file their annual return within that time frame are at risk of being struck from the register. And so whatever province you're operating in, be sure to check your corporate registry website to make sure you know what those timelines are. It's, I think, 6 months in Saskatchewan. It's, I think, 4 months in British Columbia. Um, Federally, it's based on your anniversary date. So be sure you know when these items are required based on the jurisdiction you're operating in. Okay, so we're going to talk about a few of these just in terms of what needs to be done as soon as the financial year ends, just so you know your responsibilities. So the big one is engaging an auditor. And this is maybe one of the biggest questions I get from our clients after they've incorporated, hey, do we need to undergo an audit? Because I'm sure we've all been privy to audits or been part of organizations that undergo audits, and we're maybe a little cognizant that, sometimes they're expensive and shouldering those costs can be a problem. So do we need one? What is it? What are we talking about here? So what is an auditor? Um, Per cooperative legislation, an auditor is an individual or company that is independent of the co-op. They may be a member of the co-op. And again, many co-ops across Canada and credit unions have a very large coverage in terms of the membership in a community. So it's reasonable for an individual to be a member of the co-op and also be an audit. That's a reality per se of small towns. They should not, however, be employed by that organization, and they should not be a board member of that organization. So the level of independence really reflects the control or how involved the individual is with the organization. So, for example, your CFO or a member of the board cannot be the auditor of a cooperative. And they must be a member of a recognizable professional association. What does that mean? I don't know. I'm just kidding. Generally, CPA would be the standard, or CA would be the standard. I've worked with lots of organizations that do not use, full-fledged accountants. Sometimes they'll use retired accountants. Sometimes they'll use retired bookkeepers. As long as that person has been approved to do that work by your corporate registry or any organization that you have to file the audit with, that's okay. It's always, of course, you can always ask these organizations. We when I was the board chair of a charity here in Saskatoon, we just confirmed with CRA whether or not the individual we were using would be qualified if they meet the standard for a review engagement. So not a full audit, a review engagement, and they approved it. So again, you may not need to drop a huge bill on a large accounting firm. You may be able to use, a retired bookkeeper or a retired teacher or someone who does this work off the side of their desk. So be mindful of that. Another question we always get, and again, for co-ops that are going through their first financial year, you may not have prepared an annual report yet, and you may be asking, do we need to undergo an audit? And my answer is almost always probably not. Most co-ops probably don't have to undergo an audit. And if you do, you know. If your cooperative has issued public securities, most legislation will say that that's a requirement. You need to have reviewed financial statements if you have issued securities to the public. That definition varies a little bit, province to province. So if folks do have questions, by all means, get in touch with us. We can help clear it up. The province of Saskatchewan, in its Cooperatives Act, has a list of requirements for organizations that need to undergo an audit. And it includes the size of the cooperative, the nature of business. It's a little bit complicated, but the government of Saskatchewan is also amending the Cooperatives Act, so we're kind of expecting that to change to bring it in line with what Alberta and Manitoba do. You may also need to undergo an audit as a condition of money that you have received from a lender, like a bank or credit union, or a funder. You may require an audit. You may need to submit audited financial statements to the Government of Canada, for example, if you receive a large grant. And that's because they want a third party checking the financial reporting that's undergone by the cooperative and ensuring that there's no impropriety. Now, if you don't need to undergo an audit, if it's not a requirement of a lender or a funder, or you're just a little recreation center in rural Saskatchewan and you can't really afford an audit, you probably don't need one. In which case, at your annual general meeting, you will need to dispense with the appointment of an auditor. And that needs to be one of the resolutions that your cooperative will need to pass. You need to put that to the members because only the members can dispense with the appointment of an auditor or waive the appointment of an auditor. If you do need to undergo an audit, or you feel it's best practice to undergo an audit, it is still up to the members to appoint the auditor. So there's still need to be a resolution at the annual general meeting where you'll appoint the auditor. Usually, the board of directors will put out a call for a request for proposals from a couple of auditing firms or individuals. They'll choose who they want. They'll negotiate the terms of the contract, and then they'll present that as a recommendation to the membership. And so the resolution that's put to the members will usually be MNP is appointed to the Office of Auditor for the fiscal year ending on December 31st, 2026, something like that. And the reason for that is you appoint the auditor early so that they can oversee the operations of the cooperative for the entire year, not just when you need the audit completed. Okay. So if you need an audit and you've appointed your auditor, that's up to the membership. What's that look like today? So your books may be just closed on December 31st, and there's a few things that you need to do. The biggest one is you need to finalize your books for 2025. So that means finding any expenses that haven't been submitted by staff, ensuring any payments are made, or recognizing what needs to be carried over into the next year. Lots of organizations will rely on trade credit, where they have accounts receivable, and so you're waiting for someone to pay you. You can just simply carry that into the next year, and it'll be reflected on your balance sheet. But generally, get your books to a state where you can close them for a figure of speech. Bring your books up to date so that you have a complete picture of 2025 or the 2025 financial year. The board or your bookkeeper, again, boards are responsible for this work, but they're often not the ones who are doing the work. Most cooperatives will lean on staff, so your internal bookkeepers, your CFO maybe, or your contracted bookkeeper, to prepare the financial statements for the cooperative. And so, of course, that you'll be doing that usually all year long, preparing those monthly or quarterly financial statements. You now then need to prepare a compilation for the full year. And so that includes listing out all the revenues and expenses of the cooperative. Any decisions related to allocation of patronage needs to happen here, and calculating and remitting corporate tax, if applicable, needs to happen here. And so all of that is reflected in the cooperative's financial compilation, which are the year-end financial reports. What financial reports? At a minimum, you need to prepare a balance sheet, and you need to prepare an operating statement or income statement. A cash flow statement is not actually required, but again, a lot of bookkeepers and auditors will prepare them. You then need to turn over your documents. This is why Staples always keeps those big legal boxes in stock, I feel. I've only ever used those when I'm preparing a year's worth of receipts and financial documents, and minutes to turn over to the auditor at year end. And what the auditor will do is they'll review all those documents. They'll double check basically all the entries that your bookkeeper has completed. They may make some tweaks. They might move certain expenses around a little bit and adjust your amounts. But they're basically just going to fact check everything you said. It's not uncommon for auditors to reach out with questions. They might ask for more information about why this was done or what's the nature of this purchase, usually to try and ensure that it's categorized properly and that there's no, inappropriate activity. Particularly, again, for startup organizations, you might be making trips to Costco or Home Hardware or the co-op to make purchases for your organization, and you're getting reimbursed. Again, it's really important just to have good processes in place to make sure that no one is personally benefiting and that all those purchases are authentically for the co-op that you're representing. And yeah, with those questions, hopefully you can answer all of them. And if you can't, that happens too. On occasion, the auditor may just list notes to your financial statements, just raising not necessarily a concern per se, but just saying there was this issue with a calculation and we basically have to trust them on it. I worked with an organization that would host fundraisers, and those fundraisers were primarily from cash events. So we would charge an admission, and the auditor essentially has to trust us that the money we took in is the money we reported. There's no real way of verifying how many $5 bills we received in the course of a day. So those sorts of things might appear on your auditor's report, and they're fairly normal. Okay, so that's all I'll say about the auditor. The next thing the board needs to be doing once the financial year end passes is you need to start creating your annual report. The annual report is just that. It's a report, it's a document, and it goes to the cooperative's members, lenders, funders, partners, whoever you want. At a bare minimum, the board needs to provide the annual report to the members of the cooperative and shareholders, if they have them, at the annual general meeting. And the members would then need to approve that annual report. That's a requirement in all jurisdictions. So every cooperative, every nonprofit, every corporation all need to prepare annual reports for their owners. What you do with your annual report is up to you. At a bare minimum, your annual report needs to include the balance sheet and the operating statement. And if your cooperative is more than 1 year old, you need to provide year-over-year comparisons for at least 2 years. So if your co-op was created in 2023, you're going to provide your 2024 results against your 2025 results. So it allows members to make that comparison as the cooperative grows. So that's the minimum. Your annual report might just be 2 pages long. However, it's often good to be longer. A lot of organizations will add a written report. They'll add committee reports, things like that. Things that better engage members and help members understand what their cooperative was up to. You're providing some context to the financials in doing that. And in a way, you're telling the cooperative's story. Our annual report, for example, here at Cooperatives First is about, I think, 10 pages long, 12 pages long, and it just gives a good overview of some of the work we did, the courses we built, the co-ops we helped create, in addition to our financial information. And in doing that, you can celebrate. The annual report and the annual general meeting generally is a great way to celebrate the work done over the past year. So again, the basic requirements are your balance sheet and operating statement. And if you need to undergo an audit, the auditor's report. That's the bare minimum. The optional items include a cash flow statement, which is a financial document that charts the movement of cash in and out of the organization. It helps members maybe assess the financial performance and decisions of the board and the co-op. You could include written reports that add some context and tell that story. You could include committee reports. You could include staff reports. You might have a report from the CEO, the CFO, the chief marketing officer, whatever you think best tells the story of the co-op and best enables the membership to understand the work of the co-op. That's what should be in your annual report. So as a board of directors, you make that call. Accompanying your annual report ahead of your annual general meeting will need to be resolutions. At the annual general meeting, you must have at least three resolutions presented to the membership. And it's these three right here. So there has to be a resolution that the members approve the annual report as prepared by the board of directors. There has to be a resolution to appoint an individual or firm to the office of auditor, or a resolution to waive the appointment of an auditor. And there has to be an election of directors at the annual general meeting. And that election is usually then confirmed by a resolution of the members. So at this point in time, now that your financial year has ended, your annual general meeting is on the horizon. It's good to get these resolutions written down to prepare your agenda for the annual general meeting. And there may be other resolutions, things like bylaw amendments, amalgamations, changes in strategic direction. Those sorts of things are also often decided at the annual general meeting. And now is the time to do that prep work. A couple of next steps. Again, the big thing that we're working towards this time of year in a cooperative is usually your annual general meeting. And so some of the other things that your co-op's board and management might be working on is picking a date for when that AGM is going to take place. I always joke that March and April are my AGM months. So I'm either chairing something or I'm giving advice to someone who's chairing something. And anyway, it's a AGM season is upon us. You're going to then prepare notice for your membership, and you're going to issue that notice to members so that they can save that date. You're going to finalize the resolutions and the agenda of the annual general meeting. You may also issue a call for nominations so that individuals interested in serving on the board of directors can put their name forward. You may need to do some logistical things. You might need to book a venue. If you want to have a meeting in person, you certainly can do that. A number of organizations I've worked with would use the back room in a restaurant for larger gatherings and have food and make a little celebration out of it. More and more using Zoom or Teams is the norm, and that's perfectly fine. All provinces have made provisions in their cooperative regulations for the use of electronic devices as a means of carrying out your AGM ever since the COVID-19 pandemic. You may also then need to engage some design work. Our organization, for example, has a pretty sharp looking AGM or annual report. You might want to include some photographs. You might want to have a booklet. It's up to you. Your annual report again reflects what kind of story you want to tell and how broadly you want to tell that story. So you might engage a designer to do some work on the annual report, and then of course you might need to print that out for folks. If you're having a purely electronic meeting, again, you can simply email things to folks so that they have their materials. But those are all things that the board should be thinking about now, assigning those tasks, maybe creating a checklist. We do have a number of those tools on the co-op creator if you need some resources. And so just a little bit of further learning as we wrap things up. If you're interested in learning more about some of the requirements for cooperatives or some of the responsibilities placed on managers, boards, and founders of co-ops, I would recommend checking out our Intro to Co-ops course. In particular, our Co-op Professionals course is really very much designed for folks who are sitting on the board or the management of a co-op and need to understand what their responsibility is to manage that organization. Co-opcreator.ca is our resource website. We've got lots of tools on there for preparing your annual report, for issuing patronage returns, for paying taxes, for preparing your AGM, for preparing an agenda. If you've got something that you need, maybe it's a template, there's a good to fair chance you'll find it on the Co-op Creator. And if you want to hear from us more regularly, I would recommend signing up for our Co-op Leaders newsletter. We put out all notices about any upcoming webinars, tools, resources through that newsletter. It's a quarterly piece, and it's really quite good if you're pursuing professional development. There's a link to that newsletter Uh, Again, feel free to sign up, unsubscribe anytime. But I think it does put out some good content. I'll also share a link here in the chat in just a moment. If anybody wants to attend our next webinar, it'll be at the end of February, and it'll be focused on preparing for your annual meeting. So some of the things I've touched on today, I'll do a bit of a deep dive, and I'll provide you some tools and resources, maybe some wording and some guidance on preparing for and hosting your annual general meeting. And there's my contact information. If folks have questions, don't hesitate to reach out. I will share, of course, the recording with anybody who's signed up for the workshop. Feel free to share that beyond with your network. And if you have any questions right now, I'm more than happy to answer them. So feel free to drop them in the chat, or I don't know, give a wave and we'll start a conversation. But yeah, thank you all so much. I appreciate your time today.
Yeah, I'm gonna take off, but thank you, Kyle, for helping put this in the front of my brain in a succinct way. And yeah, signed up for the newsletter and happy to have this as a resource. So thanks so much.
Awesome. Thank you so much. Appreciate it. Uh, Looks like Kofo, which I think is Peter. You had a question? I see your hand raised.
Thank you, Kyle, for the presentation. Um, I'm looking for any co-op organization dealing with agricultural products. So some organization wants to contact them. So if there's anybody in the forum here that are um, agricultural, our own is a gas enterprise.
Yep.
Maybe there's any co-op organization here with background in agriculture.
Oh,
So
I
I'd
see what
love
you
to
mean.
meet with them. Yeah.
Yeah. Yeah, if there's anybody here who is part of, say, a agricultural cooperative, just maybe make yourself known in the chat to connect with Peter. I mean, some of the biggest ones I'm aware of would be, I mean, farmers markets are, of course, quite common. They're often organized as cooperatives. In Alberta, there's a large number of seed cleaning cooperatives.
Okay.
Um,
Yeah.
they
Something
would
like
be
that.
yeah, they'd be a really good organization. I can maybe shoot you an email. I have a contact with the Seed Cleaners Association of Alberta.
Okay.
Um, yeah,
Yeah.
that might be a
I'll
good one.
get in touch with you then.
Yeah, awesome. Kai, do you have a question?
Yeah, I was just curious, what is a public security and why would we
Hmm.
be issuing them?
Yeah, a security is kind of a blanket term for an instrument used to raise money for a cooperative so it's something that has value. And usually for cooperatives, when we use the term public securities, we're referring to an investment share or a preferred share or a preference share. Different provinces call them different things. And it's a tool that's used to raise money while constraining the governance rights of the holder, because the governance of a cooperative falls to the members. Some cooperatives will issue those to the public, so non-members. And when you do so, the risk to the public goes up quite a bit. Because generally, governments and through their security commissions will assess the risk of a cooperative raising money as fairly low if they're just raising that money from their members. The board is probably not going to be that reckless with their own money. But if you're raising money from the public, they may want to see an audit to ensure that you're not doing anything inappropriate. Yep. The case of Enron and Arthur Andersen is maybe a good example of why organizations that raise money from the public get audited. Yeah.
Thank you.
Yeah. Any other questions from folks? Okay. Not seeing any other questions. I'll maybe do a quick last call. I'll also, just before folks hop off, share that link once again to our next webinar, which is your co-op's AGM a step-by-step guide. Thanks, Kathy.
Just a quick thank you, Kyle, for
Yeah.
doing this and getting me on the right track for next year.
Fabulous. Appreciate it. Thank you, Dave. All right. Hearing no other questions, we'll go ahead and end early. I'll be in touch with y'all later this week, probably tomorrow, with the recording. And if you have any questions or need anything else, don't hesitate to reach out. Thanks so much and have a great day.
Thank you.